Happy Fed Day, everyone. For those of you who don't know me, my name is Michael Kutch. I'm the portfolio manager here at HPK Provident Advisors. Now, you've probably seen us on Friday Live, and typically Friday's the day that we do live videos. But given the Fed meeting, I just wanted to discuss what I saw in the meeting today and my interpretations of it. So, as expected, we got a 25 basis point cut to the range of 4% to 4.25. Powell really emphasized the fact that now there's downside risk to the labor market, as well as reiterating that there is upside risk to inflation. So not exactly the combination you want to see. Good news is the unemployment rate projections for year end held steady at 4.5%. So that's good, and actually ticked a tenth lower for both 2026 and 2027, while GDP is projected to increase 0.2 to 1.6% this year, also an increase of 0.2 next year to 1.8, and then 2027 1.9. Now, Powell really discussed the dynamic of the labor market being that the participation rate is slowing, inflation is obviously slowing. So if that kind of remains in tandem with the pace of job growth, that can make the unemployment rate relatively stable. So maybe it's a sustainable environment, but those revisions that we saw last week, 900,000 over the last year, definitely not the direction we want to see. Instead of a labor market picture where it was looking like 150,000 on a 3-month average, we're now sitting at 29,000. So that can really be anywhere from the range of even negative to 50,000. So not the dynamic you want to see. Among the Fed members, most people were in support of the 25 basis point cut today. There was one member, the new guy, that wanted a 50 basis point cut, who actually wants another additional five 25 basis point cuts by the end of the year. He's actually part of the Oval Office, so it makes me question the independence going forward. I feel like the president's probably going to plug in a very dovish member. So we might potentially be sitting with a lower rate environment, which is obviously good, but that also comes with heightened inflation risk. Most members see 2 more rate cuts this year. So we'll just have to see if that transpires. I think given the labor dynamics, I think 2 additional cuts could be appropriate, at least one to say the very least. But the market's been all over the place today. At the start of the meeting, we're up marginally 0.2%. At the lows, we're down 0.75% on the S&P 500. Bond yields rose across the board, but very marginally. So I think a lot of this rate cut was already priced in. So far, it's not a big reaction. Tune in Friday. We'll discuss it further to see if there's any follow-through effects. Maybe the market kind of settles on one side or the other. But make sure you tune in. Before I sign off, I'm just going to play the disclosures.
LPL Financial, LLC, member FINRA, and SIPC.org. Advisory services offered through LPL Financial, LLC, a registered investment advisor. Brian Peluso, Michael Kutch, and David Harper are registered representatives of LPL Financial, LLC. Content discussed is for informational purposes only and not intended as an offer or solicitation to buy or sell any security or investment strategy. Any opinions expressed are those of the authors and do not necessarily reflect the views of LPL Financial or its affiliates. All investments involve risk, including the possible loss of principal. This communication may include links or references to third-party websites. These links are provided as a convenience only. LPL Financial and its representatives are not responsible for the accuracy or content of such sites. Brian, Mike, and David and HPK Provident Advisors may only transact business in states where they are properly registered or exempt from registration. Please contact us directly for information regarding licensing and registration status.